How's it going, everyone? It is Andre Williams from the Hard Gainer Academy. Over here, we make gains in fitness and choose stocks to get your portfolio in shape. I also want to throw out the disclaimer. I am not a financial advisor, and this is not financial advice. So what we're going to be talking about is the price prediction for AMC. What is the stock price going to be this coming Monday? Since I'm a shareholder in both AMC and GME, I get emails from my brokers, and I actually got an email from Interactive Brokers at 3:47 this morning. And it's actually kind of giving me the reason why I need to do this video so we can understand what we can look for and what's quite interesting for this Monday coming. But before I get started, let's go back on the history. So the first email that I got was from Questrade, which is one of my brokers. And they said, effective January 27th, 2021. This email was sent on the 26th. The margin requirement on long positions of symbol GME will increase to 75% to 100%. So what this means is whatever money you have inside your account, you got to be able to pay for it. They're not going to give you no margin on it, right? Also, the requirement on short positions will increase from 250% to 300%. I wasn't shorting it in the first place, but for anyone who was shorting the stock, again, you're going to have to put up a bit more capital. They also say, we recommend you review your current positions to ensure you are not issued a margin call due to this change. It is your responsibility to monitor your account and margin and deposit enough funds or close enough positions to remain in good standing. Otherwise, we will issue a margin call and we may need to close out your positions to satisfy the shortage. We retain the right to require more margin at any time we consider necessary. So what this means is, and from what I'm getting from this email that I was sent on January the 26th, pretty much updating us what's happening on the 27th, there was a lot of people who were buying, whether it was AMC or GME, but for the sake of this video, AMC, they were buying it on margin. And if there's a lot of weak hands or people that can't stomach the volatility, they have to pay that back when that margin call comes. If they can't pay it back, again, they're going to have to owe the brokerage. And the brokerage, hey, they're lending you the money. The money doesn't belong to you. A portion of it, yes, but the rest of it, no. So you need to pay it back. And it's actually part of the reasons why things got a lot more stricter. Now let's go to the next email that was sent. And this was from Interactive Brokers. This was on the 29th. Dear client, we are seeing unprecedented volatility in GME, AMC, BlackBerry, Express, and COS, and a small number of other U.S. securities that have forced us to reduce the leverage previously offered in these securities and in certain instances limiting trading risk to reduce transactions. Interactive Brokers currently has no restrictions on trading shares on those companies, and customers can open or close their position in those shares. Like many other brokers, Interactive Brokers placed options on certain of those stocks in closing only earlier this week. The plan is to lift those restrictions in an orderly manner while we closely monitor market conditions. To be clear, Interactive Brokers has not restricted the client's ability to close existing positions in any of the U.S. securities subject to market volatility and does not plan to do so. The limits Interactive Brokers has placed have applied to all customers and are not limited to retail clients or any other group. Let's continue. In order to keep you up to date on this fast-moving situation, we have put together a knowledge-based site with current information on margin requirements and any trading restrictions for the group of the securities that were mentioned. This site will provide the relevant information on securities in one place, in addition to existing ability preview margin requirements prior to initiating a position and monitoring them afterwards. Click here to review the knowledge-based articles. So just to kind of quickly sum that up, very similar to the email that I got with Questrade. This one was actually sent on January the 29th, so it was some days afterwards. In my IB account, it's a cash account, right? So one of the things, I wasn't really too concerned about this, or I didn't really look at it. As far as for my Questrade, I looked at it differently. Even though I didn't buy any of the two stocks on margin whatsoever, it still gives you the understanding to know, hey, What is going on? Yes, there have been limits that have been placed. The brokers are saying, well, you know what? A lot of people are borrowing money. A lot of people are unable to pay it back. And then we also have the market manipulation on the other side because of the hedge funds. They don't deal with these restrictions and they don't deal with these limitations. But here's where it actually gets even more interesting, which I'm about to show you guys right now. So this is the email that I got at 3:47 this morning, and what really sparked me to do this video in regards to the price prediction for AMC. Dear client, on Friday, all trading restrictions were lifted on options in AMC, BlackBerry, Express, GME, and COS, and other options that experienced recent market volatility. The options as well on the underlying stocks are currently subjected to increased margin requirements. Margin requirements are subject to change depending upon market conditions and can be viewed in your trading platform prior to submitting your order. The firm continues to monitor these volatile markets, interactive broker client services. I got this morning. So what this means is tomorrow we are going to be dealing with less restrictions, especially when it comes to options. All right. So one of the things why this is beneficial, when we have speculation, so everybody's talking about it, there's a lot of sentiment, everybody's behind it, they know what the cause is all about. And then we put that in with volume. Speculation, volume equals price action. So that means we're going to be seeing a lot of upward movements. That's what we're actually expecting. All right. As long as everyone is holding their shares, making sure that, you know what, they're just not selling out or they're not making the volatility take them off track, then we are in a great position to make some serious moves. I was looking at my chart, as you can see inside the background, and I've been watching AMC all week, is that this is a stock on January the 25th that was trading in the $4 to $5 range and then ended up finishing the week at $13. She ended up hitting a high of $25. To be exact, it was $25.80. She hit that high. And then afterwards, that's when all the restrictions and the limitations started happening. But again, she was able to actually maintain some very, very strong levels. So in regards, she moved up from 4 to 5, she gapped up, she got up to 25.80, she got down to the $8 range. Now, as the week started progressing, she started bouncing off the $11 range, $10 range, and then she ended up finishing after hours on Friday at around 13, to be exact, 13.46. So when we look at that and we consider what's going on here, there is still a lot of volume. There's still a lot of people that are behind AMC. So what will happen on Monday, or what we're expecting to happen, because hey, we can't predict the future here. But if everyone stays holding, you don't sell out. If people start purchasing, again, there's going to be a lot of FOMO. People are going to want to get in on this play. That I bet that AMC stock should move, and it's going to move very, very quickly. Because what's crazy is that AMC and GME are the highest shorted stocks right now, right? So we have pretty much GME that's well over 100% in regards to short. And the last time I checked with AMC, it's well over 70%. So what we need to consider here is that throughout this entire week, we're going to see some volatility, but it's super important in regards to that short squeeze, right? And having those hedge funds say, whoa, okay, you know what, I need to get out of here. We got to make sure we are holding. So the good thing is we saw a lot of support last week. We're going to need that same kind of support this week. If we don't get that same amount of support that we had last week, then we're going to have some downward action going on. And I'm not talking about minor fluctuations and so forth. I'm talking about the stock can be potentially dumped. All right. So as long as that momentum stays, we have speculation, we have volume, we have better price action. Volume slows down, or if people start selling and there's a lot of volatility, then the price is going to go in a downward direction. All right. So one thing that I want to make sure you guys look out for, say for example, you're having FOMO. I'd say a good range to see if you can get in would be around $10 to $11, possibly $8. But one thing you want to make sure is that you wait for confirmation. So what that would look like, it would have to bounce and it'd have to have some momentum going back up. If there's no momentum and the stock is going down, then that's not a good idea to be buying in that range, because again, that just means you're really opening yourself to more risk. And if you're going to be investing money, and I'm going to make this clear, if you're going to be investing money, that, you know what, you're going to be afraid to lose, so you're not putting up your rent money, you're not putting up your light bill money. Like, again, if this is money that, you know what, it's discretionary, it's not going to put too much emotion in the play that you're in, then by all means, be ready to stomach some volatility, because like I said, the market makers, these hedge funds, these institutions, they are going to test you. So if we could have those diamond hands, right? What could happen with AMC? I could definitely see a pushback next week to that $25 range. If it could pass that $25.80, so that $25.80, I'm definitely seeing a push up past up to $35 to $40. It is definitely doable with the same amount of volume. That's what we need. We need the volume. We need the FOMO, people getting in. We need to have people holding. This is very, very important. The more volume, the better. Again, once the volume starts dying down, if it dies down a lot, that's when we're going to see things that we don't want to see. And that's when I highly suggest you start putting your risk management measures in place. All right. So you heard it right here. If the momentum continues and we have a lot of volume and we have a lot of things going on in regards, there's a lot of support, and we get past that 25.80 range, then we could definitely start seeing 30 to 40 to 50. Is it possible that we could see a $100 move? I've been seeing that in a lot of YouTube videos, and I'm going to be honest with you. I'm a person, since I have positions in both stocks, right? And with AMC, a $100 move, that is a lot to ask for. We're going to need a ton of volume, and we're going to have to make, and that short squeeze is going to have to happen. Those hedge funds are going to have to buy back those shares. If it happens at an epic proportion, $100 is possible. But from what I'm looking at right now, again, the high that we reached last week was $25.80. So again, a move to $35 to $40, potentially $50, could definitely be possible. But hey, we got to make sure we keep that momentum. Hope you guys found this video helpful, and I'll be talking to you guys real soon. And also, do not forget to subscribe to the channel so you don't miss another video. Peace out.